You've rehearsed it, not once, dozens of times. The exact moment, the exact words. Maybe you've pictured walking into your manager's office on a Tuesday, the kind of ordinary Tuesday where nothing significant is supposed to happen. You sit down, you slide something across the desk, and you say the words you've been saving for years. You say them calmly, without anger, without the trembling voice of someone who needs this job. You say them like someone who doesn't. That's the fantasy. Not chaos, not a scene. Just quiet, unshakable certainty. The certainty that comes from knowing you don't have to be here anymore. Then you walk out, and you never come back. Almost everyone who works for someone else has this fantasy in some form. The details change, the trigger changes, the face across the desk changes, but the core of it is always the same. A moment where you choose your time instead of selling it, a moment where the job becomes optional. That fantasy is not a problem. In fact, it's useful because the people who build their way toward that moment, who plan for it deliberately, who calculate exactly what it requires, often achieve it. The people who don't do the calculation, who quit on feeling instead of math, who mistake savings for freedom without understanding the difference, those people almost always end up back where they started. Except worse, because the second time they return desperate. This video is about the one number that separates those two groups. Not savings, not a rough estimate of what you think you need. One specific number, calculated correctly, that tells you exactly when leaving becomes safe. By the end, you'll know how to find it, why most people calculate it wrong, and why knowing it changes your relationship to work even before you ever use it. Let's start with what happens when people quit without it. In 2019, a marketing director in Chicago named David left a $140,000 a year job to pursue a business he'd been building on the side for 2 years. He had $180,000 saved. His business was generating about $3,000 a month. He did the math the way most people do, savings in the account, some income coming in. He figured he had time. 18 months later, he was back in corporate employment. Not because the business failed entirely, because he hadn't calculated correctly. He hadn't accounted for health care, which ran him $900 a month without an employer plan. He hadn't calculated the full tax burden of self-employment income. He hadn't factored in how his spending naturally increased once his days were unstructured and he had time to fill. The $180,000 he thought would last 4 or 5 years lasted 22 months. He went back to employment not when he chose to, but when his bank account forced him to. He negotiated from desperation, not leverage. He took a job paying $20,000 less than his previous role because he needed income immediately. The fantasy became a cautionary story. David isn't unusual. A study by the Small Business Administration found that nearly 2/3 of people who leave employment to start businesses return to employment within 3 years. Not by choice, but by financial necessity. They didn't fail to build, they failed to calculate, they left without knowing the number. Here is the number. It is not your savings balance, it is not a figure that sounds big enough to feel comfortable. It is a specific calculation based on your actual life, your actual expenses, and what you actually intend to do after you leave. Financial researchers call it by different names. Some call it the freedom number, some call it the independence threshold. The math behind all of them is the same. It starts with one question: how much does your life actually cost per year? Not what you think it costs, not what you'd like it to cost. What it actually costs right now when you add up every recurring expense, every category of spending you've normalized, and every cost your employer currently absorbs on your behalf that you will have to cover yourself the moment you stop working for them. Most people have no real answer to this question. They know roughly what rent costs, they know roughly what they spend on food, but they have never added everything up in one place with honesty. That absence of information is what makes the fantasy dangerous. You cannot safely leave a job you don't understand how much it costs to not have. Start by calculating your true annual number. Take every expense you have: housing, utilities, food, transportation, insurance, subscriptions, clothing, entertainment, travel, personal care, and every irregular expense that hits once or twice a year. The car registration, the dentist, the annual memberships, the holiday spending. Add them together. What you get is your baseline annual burn rate, the minimum your life costs to maintain before anything goes wrong. Now comes the number most people never calculate. Add what your employer currently pays on your behalf, like healthcare premiums. The portion your company covers, which for most full-time employees represents $5,000 to $15,000 annually, the employer's share of payroll taxes, any retirement contributions your employer matches, parking subsidies, transit benefits, equipment, phone plans, software subscriptions provided by the company, All of it disappears the moment you leave. All of it becomes your responsibility. For most people, this adds $8,000 to $20,000 to their true annual cost of freedom. Most people never include it. They calculate their cost of living as though the invisible subsidies don't exist. They only discover them when the first bill arrives. Add those two figures together. That is your honest annual need. That is what your life actually costs when nobody is subsidizing it. Now multiply by 25. That number, your honest annual need multiplied by 25, is your permanent freedom number. The amount of invested capital required to generate your annual need indefinitely, drawing only on returns, never touching the principal. This calculation comes from decades of research on portfolio longevity. Historically, a diversified investment portfolio sustains withdrawals of 4% per year without depleting. The money tree stays alive. You live only on what the tree produces. If your honest annual need is $60,000, your permanent freedom number is $1.5 million. If your need is $80,000, the number is $2 million. If your need is $100,000, the number is $2.5 million. These are not suggestions. They are the mathematics of permanent financial independence. Anything below this number means you are eventually spending principal. Spending principal means you have a deadline, whether you know it or not, but permanent freedom is not the only version of this calculation. There are three, and which one applies depends entirely on what you're trying to do. The first is the runway number. This is for people who want to leave employment to build something, a business, a creative practice, a professional service. You don't need permanent independence. You need enough time to reach the point where the new thing sustains itself. Your runway number is your honest annual need multiplied by the years you require, plus a buffer of 25 to 30% for what you haven't anticipated. If your honest annual need is $70,000 and you estimate 3 years to build something viable, your runway number is $210,000 plus buffer. Call it $270,000. David in Chicago needed roughly that. He left with $180,000. The gap between those two numbers is why he came back early. Not bad luck. A calculation that was $90,000 short of honest. The second is the bridge number. This applies when you have income coming in, but not enough. You've started something that generates revenue, but not enough to cover everything yet. Your bridge number is the capital required to cover the gap between what your new income produces and what your life costs, multiplied by how long you expect to need it. If you earn $25,000 from your work and need $65,000 to live, your annual gap is $40,000. If you need 2 years to close that gap, your bridge number is $80,000 plus buffer. Knowing this number allows you to leave earlier than the permanent freedom calculation would permit. As long as the math on the gap is honest, the third is the permanent freedom number, the 25 times calculation. This is for people who intend to stop working for income entirely through early retirement, investment income, or both. This number is large for most people. Genuinely large. That is not a mistake in the math. It is the math being honest in a way that most financial conversation refuses to be. Permanent freedom costs what it costs. The 25 times number tells you exactly what that is. Here's what most people miss even after they run this calculation correctly. They calculate for their life as it is. They don't calculate for inflation. Inflation runs at roughly 3% annually over long historical periods. An expense that costs $70,000 today costs approximately $94,000 in 10 years and around $126,000 in 20 years. If you hit your freedom number and stop allowing your money to grow beyond your withdrawals, inflation erodes your purchasing power quietly, steadily, invisibly. A portfolio that felt like permanent freedom in year 1 begins feeling like a constraint in year 15 because the same withdrawal buys less of everything. The solution is straightforward. Your investments must continue growing faster than inflation even after you stop earning. Your freedom number is not a moment to disengage from your money. It is the moment the engagement becomes less stressful, not less necessary. There's also a psychological cost nobody calculates and almost everyone experiences. Watching your account balance decrease is viscerally uncomfortable, even when the decrease is planned, even when the math confirms you're fine. When you are earning, the number goes up. When you stop earning and start drawing, it goes down. Even people who understand this intellectually experience emotional discomfort watching it happen in real time. They second guess the math. They consider returning to work not because they need to, but because the shrinking number feels dangerous even when it isn't. If you haven't built the psychological tolerance for this before you leave, it will affect you after. One way to prepare is to calculate your planned monthly draw in advance, automate it, and limit how often you check the balance, quarterly at most. The emotional difficulty of watching money leave is real, even when the math is sound. It should be anticipated, not discovered. Now here's what knowing the number does for you before you ever use it. It eliminates the fog. Most people who work jobs they'd rather leave exist in a state of vague financial anxiety, where they know they're not ready, but can't say by how much. That vagueness is its own kind of trap. When you don't know your number, you can't make a plan. You can't measure progress. You can't calculate how far away you are. You just feel behind indefinitely without the specific information that would let you act. When you know your number, the fog clears. You know exactly how far away you are. You know exactly what changes would accelerate your timeline: a higher income, reduced expenses, a more aggressive savings rate. You know what your current trajectory implies about when you'll arrive. Vague anxiety becomes a specific problem with a specific solution. Specific problems are solvable. Vague anxiety never is. Knowing the number also changes how you experience the job you haven't left yet. Something shifts when you know you could leave and choose to stay. The job no longer holds the same power. Frustrations that felt intolerable become more manageable because you're choosing to be there rather than being forced there by financial necessity. The same work, the same colleagues, the same management feels different when you hold the option to walk away. The option alone changes the experience, whether you exercise it or not. People who reach their freedom number and continue working often describe this. The work became better when it became optional. They stopped tolerating what they'd been tolerating for years. They began leaving meetings that wasted their time, taking only projects they found meaningful, setting limits they'd been afraid to set when the job felt necessary. The freedom number doesn't require quitting. It ends the part where you have no choice. That ending is transformative on its own. There is one final thing worth understanding. Most people approach work as something to escape. They optimize for the exit. They fantasize about the Tuesday resignation. But the goal was never the exit itself. The goal was always what the exit represents: the ability to spend your time on what you decide matters. The freedom number is simply the bridge between where you are and where that becomes possible. It doesn't promise a perfect life on the other side. It promises that the choices on the other side are yours. If you are watching this and you don't know your number, that is the task. Not which investments to choose, not how to optimize your spending categories, not what business to build. Those things matter, but they come after the number. Without it, you are optimizing without a destination. You're running hard without knowing how far you need to go. Calculate your honest annual need. Add everything your employer currently pays on your behalf. Choose your version: permanent freedom, runway, or bridge. Multiply accordingly. Add your buffer. Write it down, then build toward it with the specificity that only a real number makes possible. The people who quit and never come back are not the ones with the highest incomes or the best business ideas. They are the ones who knew their number before they needed it, built toward it with intention, and left only when the math confirmed they were ready. Not when the frustration peaked, not when the fantasy became overwhelming, when the number said yes. That is the only version of this that works. Feeling ready is not the same as being ready. The number knows the difference even when you don't. Calculate yours, then watch what becomes possible.